time to put the spotlight on Zaggle Prepaid Ocean Services. Avinash Godkhindi, the co-promoter, MD and CEO, joins us on the show. They have been doing a lot of partnerships. So let's try and understand whether that is expected to accelerate the revenue and what kind of numbers should we expect. Avinash, hi, good morning. Good to be speaking with you. Well, we have seen a flurry of orders come by, whether from Quest Corp, tie up with Axis Bank, etc. Which segments are you seeing the maximum inquiry from, and when will the revenue accretion start from all of these orders?
Good morning, and thank you so much for having me on the show. Yes, we are seeing very robust growth, both in terms of partnerships and corporate customers sign-ups, including Bennett and Coleman, which we signed up yesterday. So we are seeing growth across board, and we're basically seeing this growth because increasingly the market, whether it's partner banks or corporate customers, are recognizing the fact that here's a profitable SaaS fintech which is listed, which is very conservative, which has 11 partner banks, high quality banks, and they get the confidence that we are doing something right, to be honest.
Yeah, clearly you're doing everything right, it seems, at least at the moment. But you know what? Revenue growth has been still a bit sluggish. 8% I think is what you clocked in the quarter gone by. Though the profitability has seen a massive jump, that's also because the scale is actually coming at play. What's a sustainable number? If I look at FY25 now, what kind of top line and profit figures are you targeting?
See, revenue growth in our business, all numbers, because there's a significant seasonality, we look at it on a year-on-year basis and not quarter-on-quarter basis per se. And year-on-year, we are already growing at about 37-38%, and we've given a guidance of YOY growth of about 40 to 50% for this year and 40% plus for the next year. And we are absolutely on track to achieve those numbers. So from a revenue growth perspective, we're seeing very robust growth, and we saw tremendous growth between Q1 and Q2 as well, right? So we were at about 118 crores, and from there we got about 185 crores in Q2 and about 200 crores last quarter. So if you look at overall the growth in the year, it's been very strong. We've crossed already 500 crores of revenue this year. Last year we did 550, and already 500 as of Q3, right? So 31st December 2023.
Yeah, so you had laid out a target of 40 to 50% growth for FY24 and looks like you're on track. But my question is, will this kind of growth rate sustain in FY25? Because the base will get heavier. Do you expect to maintain this 50% kind of growth? Are you looking at a 750, 800 crore revenue number in FY25 then?
So FY24 would be that number.
25 will be 1,000, 1,200?
We've given a guidance of 40% plus growth, and we stand by that because we see tremendous tailwinds for our business. We see tremendous operating leverage kick in. We see a lot of benefits of being the leading player in this space. A lot of times, you do a lot of hard work for years, and all of that comes together, and all the stars align, and that's the space that we are in today, we believe. We're seeing a lot of tailwinds for our business, and the model that we've built painstakingly over the years, where we've diversified revenues, partner banks, networks, industry segments, all that has started to really help us grow very rapidly.
Avinash, I think you've done a lot of meetings in the GCC region as well, right? And looking at expanding partnerships there as well. Talk to me about what's the strategy there? What kind of opportunity do you envisage for yourself in the West Asian markets?
See, these are very preliminary. We've had discussions both in Southeast Asia, in GCC. We are talking to people in the US, and these are initial discussions that we are having to understand the lay of the land, what's the right strategy. We've always believed in being very calibrated with these decisions. We see really tremendous growth in India, right? B, we see opportunities in these markets, but we also understand that, we need to be cautious as we venture into these markets. Having said that, the response that we are getting from these markets and partners like Visa and other partners who are helping us talk to banks and other stakeholders in these markets to bundle our software solutions with the corporate credit cards and purchase cards of these banks in those markets is phenomenal. So we are getting a lot of positive response. We just want to be very meticulous in our planning as we enter these markets. Just to give you a sense, when we were trying to launch our credit card business, we spent a good year and a half plus just to plan it out and do the legwork to build that business. And we've seen tremendous growth this year in that space.
Okay, I'm just trying to understand that what kind of regulatory layer actually you have to, in a sense, monitors you. Since you are not accepting deposit, do you think the regulatory layer in terms of RBI and other regulations, they don't apply to you?
Good morning, Nikunj. See, end of the day, we are working in partnership with banks, right? And we are guided by all the directives and compliances that banks ask us to adhere. The issuer of these, prepaid cards and the corporate credit cards, purchase cards, is very clearly the bank. So while we're not directly regulated by RBI, the directives do apply to us as well because they apply to our partner banks.
After what's happened to a peer fintech, would you be looking at expanding in areas of wallet? Would you be looking at expanding something in other areas of fintech?
Look, I think we have enough growth opportunities across. We are today on the expense side of a corporate customer, right? Whether it's vendor payments, whether it's employee payouts, whether it's channel payouts. Apart from budgeted capex, we cover the entire gamut of spends that corporates incur, right? And we see tremendous growth there because we just scratched the surface. Digitization, the need to be compliant to reduce leakage is huge. There are opportunities to look at, accounts receivable, for example, and there's demand from corporate customers for us to offer something in that space. And we are constantly looking at other, EBITDA accretive areas, profit pools. Forex is something that we'd, looked at, and we've done a partnership with Visa, and you will hear about our Forex programs in the coming financial year. So we're constantly looking at profit pools and areas where we can expand profitably.
If I have to introduce, let's say, Zaggle to our viewers, can I say that it's a technology company which is giving financial services, or it's the other way around?
Well, we are a SaaS fintech, Nikunj. That's how or tightly couple it with fin products which are issued by partner banks. And we take the bundle to corporate customers. We, help banks take that bundle to their customers as well. So because in a customer's mind, and when I'm talking of a customer, I'm talking of a corporate customer or even a user, an employee of these companies. The Times of India employee or ET Now employee wouldn't care whether I'm providing fin solutions or tech solutions. They want a seamless experience. They want things to work for them. They don't want to have to worry about their money. They want a Amazon type of user interface. And that's what we endeavor to provide.
Finally, what are the chances that the service which you provide could actually itself get disrupted by either a new service provider or some of your current clients, which is Visa and other companies? They may actually eventually start doing the same work. I'm asking you this because if I look at the technology industry now,
yes,
a lot of big clients they've started setting up their own global outsourcing centers. What are the chances that if this is such a critical part, the existing companies can start, hum bhi chalu kar dete hain?
Great question, Nikunj. Thank you for that. See, our business has three pillars: software, banking partnerships, corporate relationships. And this business, we honestly believe, can be built and run profitably only if you have all these three pillars covered, right? And building a base of enterprise customers or bank partnerships or a great software platform for that matter takes years of work. The second thing is, if you look at banks, our platform today, for example, integrates with the bank platform on the one side, and we integrate with corporate customers, ERPs, their HRMSs, etc. For a bank, it doesn't make sense for them to have hundreds of ERP integrations with their core banking system or their card management system. No bank that I know of, and I've spent a lot of time working with banks around the world, would want to take that risk. They would not want their system to be directly connected to a ERP, an HRMS, a CRM of a corporate customer. And that's where our layers, really fits in beautifully. We get insights from the card transactions, we get insights from the corporate ERP, and we get, information from there in terms of project codes, cost codes, location codes, etc. And we marry all of this and give you great insights about who's spending, how much are they spending, why are they spending, who's approved it, and how does it compare, year on year, month on month, across locations, across project codes. That whole insight is extremely powerful for the corporate CFO.
All right, really appreciate your time. So glad we had a very engaging chat, and I would love to understand your business model more. I mean, as we grow old, we are realizing that how technology is changing our life. But thank you so very much for breaking it down so brilliantly for our viewers.
Thank you so much, Nikunj, for having me. Always a pleasure.